Good evening, everyone. Welcome back to another video. We're going to be breaking down today basically how I use single prints. What are single prints? We're going to be going over that. I'm going to show you what they look like on a 30-minute chart, or at least where you can see them on a 30-minute bar chart. And then another thing I kind of want to share with you guys that I think is very useful and beneficial is the 9 EMA on my 15-minute chart that definitely can be played pretty positively when the market is moving quite like it did today on a trend up when it is an official trend day, unlike yesterday where we attempted to have sets of single prints and failed. Today we had sets of single prints and we held them, and I'm going to show you where we had how and where we identify them. Overall today I did not take any trades as I was not around my computer or my desk to take any trades. However, the market did do kind of what I was expecting, or at least what we should be expecting, which is what the market's been doing for the past several days, which is one time framing up. I mean, we continue to set higher highs and higher lows. What are the odds of us continuing that? They're pretty good, right? That's what we've continued to do. That's what traders are going to do until it doesn't work anymore. So that you play what's in your favor when it comes to the odds. So let's go ahead and get into it. If you guys do not mind, if you do like the content, please leave a like down below. If you're new stopping by, please subscribe, as it'll help me grow. And if not, then just hang out, learn something new. So all this is basically market profile terminology that we'll be reviewing and kind of describing. That way, whenever I break down future videos, you understand what I'm talking about when it comes to single prints and a true trend day. In yesterday's video, I tried describing that, and we had nothing to actually go back and reference as far as that goes. So let's go ahead and look at it. So today, we opened up inside the previous day's range, right? One thing to note is how we pulled back to the afternoon pullback low, which was G's low from the previous day, and held that area. Then we began to push up and grind towards the previous day's high, beginning to one time frame up. I'll review that in a different video someday. But basically all that means is we are setting higher highs and higher lows. So we continue to do that in C period. After we pulled back, we got a nice little reversal bar, as A's nice buy tail was very, very strong, something to lean against. Then we got that previous day's high. Now this is where things get interesting. This is where we can begin to identify what single prints actually are. So let me zoom this thing in a little bit, stretch it out so you guys can see more clearly. So you can see here in C period how in the volume profile here, there's a little bit of a space or a little bit of a gap. That gap is due to a thing we call single prints. It's an area where buyers begin to get really aggressive and sellers begin to get trapped, right? Anybody that was selling above B's high began to buy out, as it was not a very good area for them to be in a sell position, and buyers got aggressive. So this area that I'm highlighting here is what you would identify as single prints. Now, what are they and how do you use them? Well, whenever you pull back into the set of single prints, so initially they were where C closed. So you would take from the previous time frame's high, which is B's high, right? So once we push through that area, once you push through the price point of 63.50 up into where we closed in the next time frame. So B was the initial time frame, and then C period was the second time frame to come through, right? So from 63 up to where C closed at 68 is where the single prints are initially. So if you just look at what the screen looks like on the right hand side, that's what it looked like initially throughout the day. We spiked up in D period, got pretty good extension above the previous day's high, continued to push up, but we did not have much momentum to the upside, and nor did we hold it. Then you can see here in E period, we pulled back into this highlighted area, eating away at that single print area, right? Because as we took out D's low, You had some a few stops that got ran. So people, you know, that put stops right there at that 68 that were buying above C's high, right? They were buying, you know, 69, 70s, and then they had their stop right here at 68. Well, as we came in E period, those people got stopped out, and we rotated into the area where people were smart money sitting around waiting for that pullback into the area to get back in their positions, as well as shorts that were caught in this move up, they get out of their position, right? So that's what causes that single print. But we hold it here in that pullback in E period, and you can see how powerful it is, because as we pulled back into this area, let me go ahead and highlight this green for you guys. That way you can, I didn't, you know, see it a little bit as a buying opportunity here. As we pulled back into the area, you can see how powerful it was, because once we pulled back into that 68 to 63.50 area, we pulled back into it. We got down to 66. We didn't quite get to 63.50. We pulled back and boom, trampoline bounced up to a high of 79.50 on the day. Really good positive thing for the buyers right there, right? So that's what you want to see as a buyer. You want to see us pull back into that set of single prints, find more buyers, bounce, and then set new highs on the day. Now, why is it called a single print? Well, you can see that C period was the only time frame to pass between now to only pass between 63.50 and the price of 66. So for 3 points, no other time frame traded through that price point, showing strength of buyers. And then we continued to push up here in F period, right? We pulled back, couldn't quite get back to that set of single prints, tried to grind. Then we get some type of sideways consolidation here, accumulating more buyers in this area. For me personally, I was looking for us to maybe revisit this area where I would have gotten long. I would have been a buyer in this area or below and had my stop at C's low, right? But we never got that low. Buyers were strong. They continued to hold up here. And then we have a little bit of a breakout in J period. And then guess what? We create another set of single prints. This time it was a rather large set, but then K period pulled back and ate away at some of it. So let me go ahead and highlight the area that it was initially. And then if you just pay attention to that right-hand side of the screen again, you can see where it's highlighted from 80.75 to where J period closed up to 88.75. So 8 points worth of single prints right there. What J period was the only time frame to move through that area. And then finally K period began to pull back. But you can see how we pulled back and we held a few points worth, right? So buyers began to step back into that area at 83.25. So another 3 points, right? We held that set of single prints, and then we got a nice bounce off of it, right? K period bounced up. L kind of pulled back, didn't quite get to K's low, nor where that set of single prints were, and then we bounced. So let's highlight this area green on the day. All right. So that's where you know buyers were at the time. So we bounced into it, and then we, boom, set new highs on the day once again. So very positive for the buyers today. This resulted in what we would call a triple distribution day, meaning because of these different sets of single prints, we have a triple distribution. So where I'm about to highlight now is going to be what you would consider the lower distribution. So this whole area that I'm highlighting is the lower distribution. Then you would start the second distribution. So basically you had buyers that accumulated down here, right? And then they moved up, and anybody that bought down here, they were distributing, they were selling up here. So your next distribution would be at I's high down to E's low. So that would be your second distribution. And then your third distribution, right? Because anybody that bought here in this middle portion, they got paid when we moved up here. So you can see that by the volume and the activity, right? Volume and activity was building up here. It got distributed up here. Then we began to build and consolidate, began to have more buyers step in. and then that got distributed up here, and you can see that by our volume there. And then that last distribution would be here. So that's how you identify your different distributions. And that is only when you have single prints, right? So say we only had one set of single prints, it would be a double distribution, right? Distributions are where you have a set of single prints, few time frames that consolidate, another set of single prints, a few time frames that consolidate, another set, and then a few more time frames that consolidate would result in a quadruple distribution. You cannot have a double distribution or a triple distribution day when you have multiple single prints back to back to back. That would just result in multiple single prints, and then your upper distribution would be when you begin to consolidate on the 30-minute time frame. So all this is valuable information for the future for you guys. Hopefully you understood what I'm talking about. If not, then I do apologize. Hopefully I'll become better at explaining this, but you can see how it was beneficial for buyers whenever we pulled back. Now, something I want you guys to note is here on the 15-minute chart. I'm about to expand here. Now you can look at that 9 EMA, how we pulled back at each 15-minute bar to that 9 EMA in different time frames and held it. So each time we pulled back to that area resulted in a good buying opportunity. You could have bought here at 69.75, had your stop down here at 66, you risked 3 points, and then you bounced up to 76. So from 69.75 to 76.75, you know, you made good 5-6 points on the trade. And then so on and so forth. But very, very positive thing, or something to note, is how we pulled back in the time frames towards those set of single prints where the 9 EMA also was at the time, right? And we held that, and that resulted in a much heavier or a much more reliable bounce to new highs. Same thing here. We pulled back near that area where we had the 9 EMA and the set of single prints, and we got a nice bounce towards the high. You can see how right here pulled back in that L period and then bounced to new highs. So I do think it would be beneficial for you guys to understand where single prints are located, and then how to use that alongside with your 9 EMA on your 15-minute chart to find good buying opportunities where you are comfortable, right? You don't want to be buying up here, right? You want to wait. You want to be the line in the grass waiting to attack your prey here on the pullback. So pull back into the set of single prints, great buying opportunity. Up here, not a good buying opportunity. Pull back into that 9, great buying opportunity. Got some consolidation, stayed above the 9, very positive if you were somebody that were holding. If not, you wait for the next opportunity. We exploded to the upside, had a little bit of a breakout, right? That kind of looked like a flag, and we broke out. And then you pulled back into where we had single prints, or at least where you identified single prints, held the 9 EMA. Great buying opportunity, right? You don't want to be the buyer up here at 89. You want to be the buyer down here at 83. Held above the 9 EMA, and then boom, you're selling at 94, right? So from 83 to 94, you're 10 points worth of gains, and then you're risking anywhere from, so you're 83 to 79, you're risking 4 points. So, you know, 2-to-1 type of trade whenever you have this setup and this type of trading in your playbook. So very beneficial. So let's go ahead and mark the destinations for you guys. And then we're going to go over our daily time frame per usual. So we're going to mark several things real quick on our charts, things that you always need to have on your chart marked. You need to have your low of day marked here. Low of day being 25 or 45.25 is the low of day. 45.25 is our low of day. And if you made it this far, hopefully you are enjoying the content. Thank you for all your support, and I hope you keep coming back for more content. Low of day. Now we're going to mark where our single prints are. This is how I like to mark it. I don't like to keep those boxes on my screen. Just it's cleaner for me. So this is how I mark them. So 63.50 is where we would say the single prints fill, because if we were to pull back into that area, you would be filling in where that gap is, right? It's like an intraday gap, just like any gap on your chart, like on your daily. When you fill, up, when you get to that previous high of day or that previous low of day where the gap fills, it's the same thing for a single print. It's like an intraday gap, so it's where the single print would fill, and usually results in a good buying opportunity as well. Not for sustainable time, but enough to get a couple points out of the trade, and that's why it's positive to have it on your chart. So single prints fill there at 63.50. They start at E's low, which is 66 even. 66 even is where they start, so that's where the gap would start, the intraday gap, right? Then you have the middle distribution, and then you have where the single prints would fill here in I period at 80.75. 80.75. Single prints fill. And then single prints start here at K's low of 83.25. So single prints start. And then you have your high of day up here in M period at 94.50. 94.50, high of day. If I could type. So I hope you are following along and marking all these reference points on your chart. So there you have it, and you can kind of see our different distributions that are marked. So your mid or your lower distribution would be B's low or B's high to A's low. So from 63.50 to 45.25 is the lower distribution. Then your middle distribution is from 80.75 to E's low at 45.66. That is your middle distribution. And then your upper distribution is from 94.50 to K's low of 83.25. So you would treat each of these distributions as different days, in a sense, as gap, right? So you would treat this as one day, this is a second day, this is a third day, each one with its own gap above, right? Because it's an intraday gap. So most positive thing for buyers is to open up in the upper distribution and continue the one time frame up on our daily. That would mean taking out that 94.50 and then testing that 4,600 level. Sellers want to see us stay below that high of day and backfill some of this single prints and then get into the middle distribution, finding acceptance there. And then any aggressive selling would bring us into the lower distribution, which is what buyers do not want to see after a positive day like today. Volume was very good on the day, I believe right at average or just above average, which is what we have not seen over the past several days. So very good thing for the buyers. Bulls are in charge, in control here, and that's what we like to see. That's what we want to see. So let's go ahead and look at our larger time frame. And we're just going to go over our weekly and our daily time frame because nothing has changed in our monthly. Monthly is still one time framing up. Now, weekly, been one time framing up for 2 weeks in a row now, meaning we're taking out previous week's highs, right? We were in a balance. We were in a consolidated area, came out of that inside week by breaking that 44.98 area and then hitting one of my targets, which was around the 45.08 area. My second target was 45.8850, April's high from 2022. Next target I have on my weekly chart is 46.31, and we could easily get there if we continue to have some strength in this market. So we've hit all my targets to the upside. Continue to grind is what we're doing as buyers. So watch out. Do not be shorting this market until something tells you to, as far as market generated information. Now let's go ahead and look at our daily time frame. Daily. So volume, oh, didn't mean to zoom that in. Volume has actually not been, it was just below average today. So not very impressive, although it was an impressive day. Something kind of changed today, something that we want to make note of. And that is how, let me zoom this in. And that is how we've been not getting much extension from previous day's high. Well, today that changed. We got a very good extension above previous day's high, and we hit that weekly high up above. So very positive thing for the buyers. Continues to grind, and that will not change until we take out a previous day's low. And that's when things may change for the sellers. But you can see how this 20-day moving average continues to creep up to this gap. And that is going to be my primary focus in the future. Do we hold that gap and continue to grind up higher, hit the 4,600 level and above? Do we find acceptance the first time? Do we not? And then find a little bit of a rejection there, roll over, putting ourselves into some type of balance as this 20-day continues to creep up. So with that being said, ladies and gentlemen, thanks for stopping by. I hope you all have a wonderful day. We'll catch you in the next one. See ya.